This is John Kvale of JK Financial, and this is our July. Yes, it is already saying goodbye to July. There's a rhyme in there. Poet didn't know it. So I will keep this. I'm on a remote location. More about that soon, but not today. Keep this short and sweet, as part of the secret is that we do have very good Wi-Fi, and again, I'll review that. This is our July Financial Planning and Capital Market Review by John Kvale, as mentioned. We do this in audio, video, podcast format, so keep your hands on the wheel if you're driving down the road, but let's go have fun. And I've got a couple of points here to do. This shouldn't be too long of a video. The first is called Advyzon. Advyzon is there was a little bit of confusion. We're very excited. Those of you that are in listen-only mode, I'm hovering over the headline to the first post. There was actually two posts. We were excited because, long story short, we ended up implementing some new software. I know this is what created some of the confusion. We are doing some new software that we're running parallel to our current software. We'll roll it out in January. You won't see a lot of it. It'll just help us further make things better for you guys. And that caused some questions. Some people said, "Oh no, John, do we have more changes?" No, these are all changes on our side, but they are somewhat a result of some of the things that have changed, predominantly the merger of TD Ameritrade and Schwab. So we're excited about that. I maybe jumped the gun and didn't explain. All right, super excited about this. Those of you that listen only mode, I'm going on to the capital markets posts. Again, newbies, we do this in kind of a financial planning and then a market economy, etc. Grabbed a neat visual capitalist chart, which those of you in listen-only mode, I'm hovering over right now, and I've got a link to the concentration post. It was a very neat graphic about just how concentrated, in particular, the S&P 500. There are other capital markets that are also, but the S&P 500 is the one that's really concentrated. Long in the tooth, going back to 99, I don't want to draw a parallel, but the NASDAQ became very concentrated with tech stocks way back when. It's not healthy. What do I mean by it's not healthy? We've talked about this over and over and over. And that is it's like having an all-star on your team and nobody else. If that all-star gets hurt, trouble. All right, here's the sizzle. I guess this is the sizzle of the post. I'm only at 2.5 minutes. So this is our friend Koifin. So we have two new big softwares. I'm trying to stay still so the video doesn't try to capture me. But this is our friend Koifin, and this is the S&P 500, notably by the SPX. Less the RSP, which is the equal weight S&P 500. Look at this sucker here. This is when concentration is going vertical and becoming greater, and this is when it's becoming less. This could be bumpy. I mentioned that here. It could be a little bit bumpy in the headline indexes, but overall, this is healthy. We want all companies to thrive in a growing economic environment. I know we worried about interest rates, and it looks like those are on the down. Those are on the downhill. Those are on the lowering. But this is something we got to bring things that are of interest and importance and maybe somewhat worry us to your attention. This is a good thing. This is not necessarily capital markets going down. This is the capital markets evening out. Okay. That's it. Again, remote location, more on how we're doing this in a remote location. Thank you for your time. Have an awesome day. I'm still under 4 minutes, and we'll talk to you at the end of August. Here we go. Thanks.
On 5.